All right, what up, speculators? Let's fire up the Futures Fanatic live stream for a special Friday edition. I wasn't able to stream yesterday due to some conflicts, and I'm going to have to drop probably a little early because I have a call right at the close as well. But at least I'm starting out this stream properly with the disclaimer and risk disclosure, which I will leave up there, I believe, for 30 seconds. I want to read the part in the middle. The rest is fun. You want to read it? Try to have a little fun with these things. But this live trade room disclosure and this live stream disclosure is a presentation for educational purposes only. And the opinions expressed, which will only be mine, are those of the presenter. That's me. All trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account. If it's your first time ever watching this stream, I trade a mixture of some what I call tracking live accounts. Those generally have balances between $5,000 and $10,000. And then I also trade a variety of different prop firms, mostly just to show that small account trading using the leverage that's provided by these firms can be pretty beneficial. All right, I'm seeing that we're getting a little movement here. Oh, I just got out of, I was short the S&P there. So out of that trade right there. As soon as someone comes in, if you can do a quick one for picture and sound, that's always helpful. It looks like everything should be working. Had a rough day with these Express accounts the other day, but rough day just simply means stayed within my risk budget. My risk budget is $400 in these accounts. And as you can see today, I'm up $360, and it took $360 just to get me back to $115. But that's fine. That's why we keep it really small. I just started trading these. This first time I've traded them in a while. All right, let's go over and switch over to, thank you very much. Appreciate it. So picture and sound's working okay. I'm going to close and cancel this. I don't really want to be long the NASDAQ from VWAP, but we probably will bounce from here a little bit. Instead, I'm taking a long from what we call the -1s. I had a very, very large day in these tracking accounts, these Apex ones. I call them tracking. Anytime that it's not a live account or a funded account, I just kind of call them tracking. I probably shouldn't call them that because I have live tracking accounts as well. But anyway, it's rare for me to be up $3,000, but I just wanted to pass some of them. So I passed this one today, and we have like kind of a solid green ass up there. I no longer leave this stuff on the screen just because, you know, of the trolls, meaning, hey, you only do things when you're not watching. Well, if you want to see how I get there, you can check out my trade room. All the information is in the link below. But we'll be streaming here Tuesday, Wednesday, Thursday as well. We'll take some trades if anything does set up. The story today has really been about gold having quite a strong morning and then leading into the afternoon. And of course, Bitcoin. Is Bitcoin going to hold up about $4,000 here and the 117,500? I was treacherously short a little bit last night, and now what I'll do, I imagine this is going to, if you're not trading the MBT, Micro Bitcoin, you can trade it at a bunch of prop firms like Apex, Bullinox, and a number of others. I suggest you at least look at it. It's a great trading instrument. It does its own thing, but we can use, and I use the same strategies that I use here all the time, which is the range trader here on the left and stay in your lane over here on the right. And now I'm essentially flanking here, if you will. We call this peppering the book, or I call it 118,605 for a short, 116,935 for a long. But what I was saying is the way this thing acts is it will often have a big move kind of right at the close, especially at times in which Bitcoin is being actively traded, which it is right now. So you might want to check out MBT. There are a number of firms where you can't trade it, and you should be able to trade it at all your live brokerage accounts, such as Interactive Brokers, AMP, NinjaTrader, and a variety of others. And the margins aren't too bad either. The spreads are not great, and the liquidity is not super, but if you use if you use limit orders, it's not a big deal. All right. I wanted to share a few thoughts on some things that are going on overall in the industry. The first is, for a long time, I was very anti-FX CFD firms in terms of promoting them, working with them. I never had an account at FTMO or any of the others. But over the last year or so, a couple firms that started with a background in FX and CFD made entries into the U.S. markets, such as my funded futures, and they've just done a very, very good job. In fact, I think they're probably one of the top futures firms in terms of customer satisfaction, price, payout policies. A lot of people like my funded futures. So in the coming weeks, what I'm going to be doing is, and I would love your suggestions if there is anyone from Europe or elsewhere that's more familiar with some of these FX and CFD firms. I've been contacted by about 15 of them that are going to start entering the futures markets as well. And for those of you who aren't aware, to be involved in futures is a heck of a lot more money, regulatory compliance, and technology infrastructure requirements than setting up an FX CFD firm. You can do that. You can set up an FX CFD firm kind of overnight for $10,000, and some company in Malta will get you started. So futures requires a much higher bar. So the ones that are entering the futures markets are going to generally be more well capitalized, if you will. They're going to use the same products, the same data feeds, the same kind of platforms that you're sort of used to. So for the first time ever, I'm going to, I don't want to say promote. It's not really a promotion or endorsement as much as just create awareness of these firms. Next week, I'm going to be starting with one called HOLA Prime, H-O-L-A Prime. And what I'm going to do is a little different, which is participate in both their CFD programs, which you're allowed to do as U.S. citizens for some of these firms, as well as participate in the futures program, because I do want to begin to understand a little bit more about some of the CFDs like US 30, which is just the Dow Jones. Okay, so tune in next week. I'm going to basically be doing trading those accounts using Rhythmic Connections and Tickblaze, right? So if you've been watching my stream for a little while, Tickblaze is a platform that I've started to utilize for all firms that don't support Ninja. And the firms that don't support Ninja are going to be growing in number because it's more expensive and more complicated to get connected to Ninja now. You essentially have to have a Tradevate account, and that's getting more and more expensive for these prop firms. So I just want to let you know about that. And I think that there are going to be a number of additional choices from some of these types of firms where those of you that are in other parts of the world and are already familiar with FX and CFDs can have a combination of both accessibility to the futures markets and to that world as well. Now, when I always say FX CFD, really the CFD component of it, certificate for deposit, which is just a bullshit made-up term that just means, you know, a tracking derivative like gold or Bitcoin or oil or all the stock indices. The thing with those is that they're kind of made-up feeds and things like that, but that has become infinitely more popular in that world. There's not many people left that are truly trading FX pairs. I mean, there are some, but there are not that many that are and certainly the way we can introduce more people to this world is via things that track the markets that we're already trading, like the NASDAQ, gold, oil, the S&P, and the Dow Jones. All right, so you're seeing some nice little moves out of the NASDAQ here. It did do a little what we would call scare the children and drop below VWAP, but then quickly recovered. I'm going to get in an order here to sell at this swing level and at the plus ones.
Order submitted.
And up here as well. So this whole zone here is called the offer zone, and we are on a day in which we are inside day. So we're inside day over here. That just means that we're trading between this level right here, which is the prior session high, and this level right here, which is prior session low. So anytime that you are within range in the range trader, you can be also range trading over here on stay in your lane. All right. You do not always, of course, have to be a mean reversion trader to trade these strategies. You can find opportunities to trend trade by pullbacks to certain levels, fade certain levels. But generally, we want to use VWAP as a target and not as an entry. So I like to use VWAP as a target and not as an entry. Not all the time. But visually, what I want you to notice here on the NASDAQ today is how flat these lines are. See how flat these lines are? There's no slope to them. And that's indicative of the fact that we're in a range, okay? The other thing I just added, thanks to Squirrely Brad, are you here, Squirrely Brad? Is I added this volume profile here, which I like. And we can also now see, we can see VPOC on this chart as well. So now we're overlaying VPOC, and that's this line right here. It's a little hard to see, but that's this line right here, which is VPOC. So 22,964. So we're really in balance in these accounts here. So sometimes, but not always, you can rest a bunch of orders here and some orders down there and see which ones get hit. This is not going to be a day in which you're going to want to, again, try to trend trade against any of these bands because there's just no trend today, right? Now, if you check out my Prop Done Right ebook, let me turn that on over here, by the way. Where's Prop Done Right? If nothing starts happening, I think what we're going to do is listen to some songs. You guys want to listen to some songs? Do you care? We have so many good songs now, but I got to download them first. Oh, here we go. There we go. That's that. And then I think I have a, I need to label these things better. Anyway, you can see it there in this. Oh, no, I always point the wrong way. Right over there. So that'll be in the description down below, Prop Done Right. All right, I can also open up to any kind of questions if you have general questions about any of these strategies, anything that you're seeing in the markets. If you do have any opinions or aware of some of these FX firms that are starting to get involved in futures, I really no longer am going to have a whole lot of time to trade them myself and vet them and do all these things, but I'm not going to just willy-nilly endorse something that I don't do some research. So what my requirements are is, first of all, I have to speak to the senior management. That's either the founder or the CEO. I've done that with the 3 firms that I'll be talking about. Nextly, again, just by de facto, if a firm is able to get into the futures markets, they generally are going to have a decent amount of funding and technology infrastructure and know-how, because it's not easy. I also require now that all firms have a brokerage relationship, so there's a path to put someone in a live market should some of the regulations or things change. So those are all kind of the requirements. What is my setting for the profile in the Renko chart? Yeah. So first of all, it's a little faded. I think I'm gonna change it so that it's not so faded. But what I have here is, so it's the order flow volume profile, and you're gonna set it to the right. So profile alignment to the right. I use a 68 as the value area. A lot of the time that'll default to 70 or 80. I'm just using 68 as the value area. It's a little bit of a Fibonacci thing. It's not really, but. And then I have the POC set to obviously visible and that kind of thing. So anyway, here are the settings. The one thing that you want to make sure that you do is you turn off auto scale, because if you have auto scale on, which is by default, it's going to squish down your stay in your lane so that it can show the whole profile, and I don't want it to do that. All right, I'm going to put in some orders here to buy the -1s and -2s on the Dow Jones as well. And I think I'm going to increase the opacity of that so I can see it a little bit better. So I'm going to go to indicators and go up here and to go to order flow volume profile. And then I think I'm going to make this like 25. See if we can see it a little bit better. There we go. Kyle, thank you. Yeah, there was some confusion on that. Turns out, so I want to see if I'm over on this screen. Can you guys see the chat? I'd have to like zoom it up. No, it has to be. No, I have to wait till it gets further up. Oh, you know what I could do is I could do this. I can move my face up here, and then I can move this over here. Just experimentation. There we go. Now we can see the Now I can see some of the chat. So thanks for letting me know, Kyle. I don't know, did you send me an email? A couple of people sent me an email as well. So the way that went down is there was no code. It was automatically applied. You just had to make sure that you were buying the exact right thing. And I think they kind of scared you with this. Did you apply a coupon? Did you apply a coupon? So I gave them some feedback on that. And what I'd like them to do is accept a coupon every time, even if that just sort of tracks, because I want to know who used the coupon, whether you're cookied to me or not. But you should have been able to get the deal. And if you saw the website now, they did change it. So the Warrior, it's not 90% off anymore. It's only 80, and I think it's 40% off the instant Gladiators. So I don't know how long that will be going on for. Also in my, this is rare, but you have to, be transparent if you want all the time, is over here. I think I put it here. We have both the free Discord, which has 4 or 5 channels in it. You can find the Discord down below. And then if you end up becoming a member of our trade group, even just for a month, we're going to give you lifetime access to the Discord and all the other channels down here. But I think I put it here. Yeah. So yesterday, I'm usually very conservative on the first couple days because I like to build instead of do what a lot of people do is gamble when they have the most amount of drawdown. I just don't like to see red numbers. But as you can see, this is how I closed yesterday. I have a $400 risk budget in these accounts, and on these 2 up at the top, I had to close them out. But if you keep your risk budgets under control, right? And I would suggest that most people start with a risk budget that is a little less than $400. Mine comes from essentially having done this a long time and easy ability to earn that amount of money on many days. But you can see I just had a small day here, and I managed to get a bunch of them back up. A couple more good days, we'll be back up to starting stack on these Gladiators. And then I've been making very good progress on the wire-to-wire challenge. If you hadn't heard about that, I would love anybody to still take me up on it. If you haven't done anything with PropShop, you can do this with any firm that you've never worked with before. Maybe you do it with Hola Prime next week, which is purchase an evaluation, go through it the right way, and then fund the very first series of accounts that you ever get to. No resets, no blow-ups or anything like that. So in this case, these are accounts 1, 2, 3, 4, and 5. I'm never going to blow these up. I'm going to take them super, super slow, and they'll just turn into cash flow machines. But not instantly. It'll take me a couple months, which is fine. I got a lot of other things I'm doing as well. I might trade these up here a little bit more aggressively, but they have about half the drawdown. So anyhow, you go from, what you can't do is eat like a bird and shit like an elephant. You can't have $500, $600, $700 losing days in a $2,000 or $2,500 account. You just can't do it. I did a video on discipline. That's the only thing you have to do in these programs. You have to trade micros. If you're not trading micros, I really can't help you. And I don't care how good a trader you think you are, you will eventually lose those accounts. You're just going to lose those accounts. They're just too small. If you really started with 12 or 15 or 20,000 of actual money, you could trade a few minis and get them to the point where you could trade several minis. I would say you'd need an account with $40,000 to $60,000 in it before you should be trading 2 to 3 NQ or 2 to 3 ES. Now you need to understand the difference between the prop notional value, which is nonsense, and the real world, right? I mean $40,000 to $50,000 of real money. So back to discipline, all you got to do is trade micros. Have the discipline to only trade micros. And then the second thing, you just have to abide by your daily risk budget. If you do that, a lot of people commented on a short that I did where they said, well, you still have to have a good strategy and you need this and you need that. No, you actually don't. You could have a camel or an emu spit at your screen and determine direction and instrument, and if you just managed risk, you would probably break even over time. So you don't need to actually make it all that complicated or anything. All right, I have lost the stream hit thing over here. Let me get it back. And we'll move back over to here. Dow going up a little bit. NASDAQ recovering. Okay, here we go. I'm going to get a fill here, probably. I use both. So the world of copiers is constantly evolving, and I'm going to be doing some content on this trade copier. I keep jumping all over the place, but let me come back over here. I'm going to be doing some content on this trade copier, which is called Thor. The one I'm most familiar with and use the most frequently is Flowbots over here, Replicanto Flowbots. If you want a bunch more on trade copiers, you can check out my website and go to the blog. And I did 2 articles on multi-propping and trade copiers. The trade copier one is already getting out of date because I did not talk about a few others that I've since found, including Thor. So the ones I mentioned here were Replicanto, Affordable Indicators. Apex has one that they white labeled from Replicanto. Tradeovate has account grouping. Quant Tower has it built in. Project X has it built in. Volumetrica has them built in. ETP is the one that we use currently over at Tickblaze. ETP is going to work with any Rhythmic connection, and then TradeSyncer is one that's cloud-based. So lots of choice, lots going on. Keep the questions coming. It's helpful while things aren't really moving around. So if you have any additional questions on that, did I leave? Yeah, I left that in the area so you can see it. All right. Got 6 minutes left in this particular candle. What are you guys' weekend's plans? And I can say you guys in every sense of the word. Every sense of the gender. My YouTube audience is 96% male. I mean, look at me. I'm a handsome guy. We need to get more women involved in the trading industry. Come on now. 96% dudes. So that's why I need to start. I'm going to do ads for beef jerky, workout supplements. All right, here we go. See if we can get a fill.
Order filled.
I mentioned this show that I'm watching called Stick on Apple TV. It gets into gender fluidity as part of the storyline. It's really funny. There's a comic. I don't know his name, but he's a really funny comic. It stars Owen Wilson, but this comic is really funny. And there's a whole series with one of the characters. Hey, you guys. All right. Short. So what we'll do is put our target down here.
Order submitted.
Let me use this opportunity to tell you where you could run a stop if you wanted to run a stop. As you can see, I'm not running a stop. It's actually the opposite. I'm looking to add to these positions up here. But one stop methodology to use is to go ahead and just measure the distance from your entry to your target. And if you wanted a 1-to-1, let me ask the question. This is a 43-point target. Where's your stop if you want 1-to-1 reward to risk ratio? You don't have to give me the number, just how many points above my entry. Or let's get even more sophisticated. What if you want a 2-to-1 reward to risk ratio? What would your stop be if your target is 43 points? And the great thing about this, folks, is that there's no one hunting any of these. These are made up from dynamic levels. They're not some sort of obvious sort of swing high or swing low or structure from looking left. I mean, I don't know. Jeez. I've watched as much of that ICT nonsense as I can possibly handle. It is just utter total bullshit. Liquidity pools and smart money and this. It's just such nonsense. Total nonsense. But they have these cults. They've created a cult. And all they do is look left. They're just constantly looking left and assigning their version of reality to what happened at those levels. Well, clearly, this is smart money doing this, so this creates a liquidity pool doing this, and then this happens, and then that happens. What happens when the market reverses strong at a level? There was more sellers than buyers. What happens when it reverses on the downside? There's more buyers than sellers. Are they algos? Were they absorbing liquidity pools? Is it smart money? Is it a drunk monkey pushing buttons? Is it some guy in his basement? Doesn't matter. I'm not saying you have to do anything I show or teach here, but I just keep it simple as shit. I mean, you can't get any simpler. I just put the order on the line. That's it. If it started to go higher and I didn't want to add to it, I just hit the close button. I mean, I really don't know why everyone makes this more complicated than that. So you find your lines, you find your thing, and just stick to it and then manage risk. But if you're looking left all over the place and then setting your stops at obvious structure levels, I'm not saying that when these guys are doing their analysis, they're improperly identifying structure levels. One of the issues that I've always had with Fibonacci, whether these Fibonacci levels are valid or not, is the subjectivity that comes from drawing and anchoring from just very obvious levels. Right? So now what I'm going to do, and what I do here sometimes, is I just scale out in certain accounts, and then I'll just leave some runners in others. These are some very large accounts that I'm close to passing, so I'm just going to take my profits here. And by you know, and then in these accounts here, I'll leave them for target. So question about keeping, let me come over here to when I mention a question. Do you think keeping risk per trade at 10% of drawdown is good? No, not for the purposes of these prop programs. Where 10% comes in is a good starting point for your daily entire risk budget. Should not exceed 10% of your starting account balance. So if you are starting brand new with a $2,500 drawdown, you can risk about $2,500. $250. If you're going to risk $250 per trade, if I'm understanding 10% of drawdown risk per trade, no. Or if you're saying your risk per trade should be 10% of your total drawdown, that's going to be really hard, because if you're just starting out and you have a $250 daily and you're only risking $25 per trade, that's just going to be really difficult. With any market, whether you're trading the Dow or the, $25 is 10 points in the NASDAQ. It's 50 points in the Dow Jones. You could maybe do it in the Dow Jones with a single contract. But what you really want to work your way towards is getting comfortable with what all professional traders do, which is trade around ideas and positions and take inventory on and off depending on how trades go. Now, there are some traders that go all in, all out. Don't get me wrong, and some very successful traders. But more often than not, and especially truly professional traders that are working desk and working size, they can't do everything at one particular price. So they're scaling in, they're scaling out, right? So good question. I would say for this kind of stuff, don't do risk per trade as a percentage of anything. Do risk per trade based on what I just showed you. Make sure that your trade has a 1-to-1 reward to risk ratio, and that you have a consistent methodology for your entry and target, and that those entries and targets need to be dynamic. Let me say that again. If your entries and targets are not dynamic, okay, a swing high, a support double bottom that is not dynamic. Let me say this again. Okay? A trend line, a moving average, not dynamic. If you're going to use a moving average, use it for one simple thing, which is to quickly identify trend, which is what I do over here with the T-line. Okay? This is a 233 EMA that just quickly identifies trend on a higher time frame. Trend lines, moving averages, support and resistance, double bottoms, candlestick patterns. It's all complete bullshit. It has no predictive value, and it's not dynamic. But Rod, even a VWAP, even VWAP's a lagging indicator. Fine, it lags price or it tracks price. It tracks what it tracks. Volume weighted average price. But we can all agree that this is mathematically one standard deviation from here. And up here is two standard deviations. It's dynamic. So then if you want a risk per trade, just create the dynamic stop and target that I just talked about. It would help me if there was a follow-on question for that. If anyone is unclear on that topic, you don't have to believe me. Without a doubt, the only guy on YouTube that's been trading as long as I have. There's nobody even close. And I mean actively trading the futures markets. I don't mean stock back in stocks or whatever. I traded the full big contract in 1995. 1993 in my private account. 95 starting at Merrill Lynch. The very first time the E-minis came out in 97. So all I'm trying to do is to tell you that if you want to stay in the game, you need to use a strategy that has some amount of dynamic aspects to it. Because there's only two things that matter, volatility and volume. That is it. Learn how to understand the volatility profile, the current regime of the market. We use the 7-day ATR. Measure as many things as you can as a percentage of ATR. Where is price relative to the expected range for the day? And then understand how to look at volume. And please, volume is not the bullshit shit you see at the bottom of a stock chart. No, notice how when price went way up, the volume went way up. And see how when all the selling, the volume went way up. All right, what are you going to do with that? Give yourself a volume profile. You don't have to make it super fancy. You don't have to learn TPO, time price opportunity, with all these X's and O's and A's and B's and C's and the amount of time that price. Who cares how much time something stays at price? I don't know. Why? Why is that a thing? Every time I try to get these people that have been doing this for a long time to explain to me why that's a thing and how it makes it predictive and how they trade it properly and can they make more money than me, because that's ultimately all I want. Are you better at this than me? That's why I like Stick, because he's just so cocky and confident. He's like, I'm just a better golfer than you. And I'll always be a better golfer than you. I'm not a very good golfer. All right. Farting around here in the middle of the range. S&P up to the plus ones again as well. All right, a lot of stuff came in here. Let's see what we got. Okay, fibs. If fibs work for you, great. I think fibs are unfortunately not dynamic, and there's a lot of discretion associated with. Let me come back to here just because I'm going to answer these questions. So do the same thing with fibs. Cool. The problem, and look, if it's working for you, I don't want you to change anything, right? If you are consistently managing risk properly and never take large losses, then the wins will happen a lot of different ways. So a lot of the stuff with strategy is just filling in the blanks around just really poor risk management that people don't know how to do that. If you want to use fib levels and add at certain fib levels and feel like you're anchoring from a point that makes any kind of sense, The problem is it's not dynamic. And fib levels do not account for volume. They don't account for volatility. They don't account for anything. They're simply just past history, interpretation of future results. But what they do is they give you some sort of magic lines to believe in. So I tried to be encouraging, but I just can't. So in my Discord group, I'm not streaming in there. The streaming occurs right here in my live trade room. So if you're interested in watching this in real time, 2-week free trial. There you go. And that is where the majority of these results come from usually. And again, I want to emphasize these were outsized gains because I just wanted to finish these Apex accounts, these 250s that I've just had for a long, long time. I'm doing a mixture now of always having about 4 or 5 funded accounts from most firms just so I can keep up with their payout policies and customer support and all that kind of stuff. So that's the answer to that. So there's that, 2 micros. Okay, cool. Are those VWAP standard deviations bands? I'm having, yeah, they're just, what you're going to need is you're going to need the order flow VWAP suite from Ninja if you're using Ninja. If you use anything else, I know there's some people that saying there's a couple free ones that do it pretty well, but you just have to have a paid version of Ninja and then you have to use the order flow suite here. Now, if you want to do it for free, you can do it over here on TradingView. Let me just go to this screen here. You can go over here to TradingView and you're going to want to use this indicator right here, which is free. It's called VWAP Standard Bands V2 Mod. I did a short on this and it got like 70,000 views. I was like, whoa, people really want to know exactly what you're using. So it's called VWAP Standard Bands V2. Okay. And if we really want to take it to the next level, and I do this in that thing as well, I use 128, 2, and 2. So SD1 is 128, and the next one is 2. And if you do that, they should be identical. Let's watch today. It won't be, but like so. You see how this red line up here? This is +2, 63.16 on the S&P, 63.16 on the S&P. And yeah, I told you it would be off today. 63.08. Not exactly sure why that is. Usually these are much more spot on. 63.16 is the plus. Oh, sorry. 60. I'm looking at the wrong level. No, they're correct. Yeah, I was like, that's way off. So here's the +2, 63.16. See how they're the same? 63.17. I mean, these are really close, right? 63.17. Okay, so again, it's standard VWAP standard bands V2. You can get this free in the community area within TradingView. The thing that's a bummer is that it doesn't look like Project X or TopStep is going to open up that API so that you can actually put in some custom indicators on. If they did that, and maybe they're going to have it at some point, it would make Project X one of the best things out there because it's web-based, it's functional enough for kind of prop trading, for small account trading. I really wouldn't trust it for trading big size and stuff like that. I just don't trust web apps for that. But and obviously you can't trade options or anything on it. But for prop stuff and for easy accessibility in web, it's fantastic. But they do need to, so what mine looks like over here is just, I don't have the bands over here. So I reference the bands on NinjaTrader, and then I'll place my trades. I mean, so do you see how this is 63.15? That was when that was where +2s are. I know that +2s now are 63.17, so I just move it up to 63.17. And then I have a visible range profile on this particular chart, which I kind of like. All right, let's see here. Question on range trader. When you mentioned break above, close above POC, is that an SOS? No, it's not an SOS, strength of signal. It's just a potential setup. And what it is it's not a breakout trade. So for instance, right now on Right now on this POC right here, 22,972, you would need this candle to break above and close above, and then it makes the POC a buy. Then you put a limit order on the buy. You don't chase the whatever the candle closes. If the candle closed way up here, the signal would be valid, but you would place the order back here for a pullback back to POC. That makes sense? Okay. Look for liquidity grabs and fake outs. All right, well, great. Okay. You're fooling yourself, you don't believe it. Who loves sticks? You're fooling yourself, you don't believe it. Look, if it's working, man, you read your horoscope enough, you're going to find a day where it just seems like it's spot on. Liquidity grabs. Let me see if I can find the liquidity grabs here today on gold. Seems like it went up, and then it went down, and then it went up, and then it went down, then it went up a lot more, and then it went down a lot more. And to me, it seems like if you took profit on longs or shorted every time it touched this line and controlled your risk, wow, you made a lot of money. Even with this serious slope that it had today.
Order canceled.
If I keep being such an asshole, no one's ever going to leave a comment. I think I just answered my thoughts on liquidity grabs. Every once in a while, my girlfriend and I will go to a gay bar, and I like when I get liquidity grabs. Makes you feel like, I'm attractive to everyone. All right. Up to what large fund size account would your system not work any longer? That's a weird question. Size has not a lot to do with systems. I mention this occasionally. Everything that I'm doing here is for educational purposes and is geared towards small account trading and prop. I don't do much of any of this in my standard trading. This is the easiest thing to learn, to understand, and to learn how to initially manage risk, and then eventually want to grow from there. What I do is I sell premium on the treasury options, usually on the ZN and the ZB. That's what I do. Options on futures. Not buying them. I simply just, if I have a long setup on the range trader, I will sell a put. If I have a short setup, I will sell a call. I'd rather just get paid. Right now, though, I'm out of business a little bit because vol has come in pretty substantially. So for those strategies, if you will, since the ZN is the most traded instrument every day, with the exception of the MNQ, what is it today? Today, the ZN has traded 1 million contracts, and the MNQ has traded 1.1 million contracts, so pretty close. So if you can come up with a strategy on the MNQ that makes as much money as my strategy does on the NQ, on the ZN, then we'll be in business. But you don't need a lot of liquidity for any of this. Come on, guys, we're retail traders. I can get filled, though, on a 50 lot in the ZN or the ZB or the ZT instantly, right on the bid or the offer, so it's nice. Can you share why 1.28 versus 1? All my settings are based on quite a bit of back testing that just has to do with the validity of certain levels. That's how we came up with the 233 EMA. It is a little bit of a Fibonacci number as well, but we just ran back tests for 12, 15 years, literally, just trying to find settings that seem to have some relevance on certain time frames. So, is there a way to trade PropShop in your NT and NT8 setup? Yes, but it'd be a little convoluted, so I'm not going to get into how you can do that. What you need to do is you need to have a platformless copier, and you connect to Rhythmic at PropShop on the copyless, and then you just need to get another connection from Rhythmic that will work on a prop firm that still supports Ninja. So you can figure it out. So question about using 1 micro. My sizing is between 1 and 3 micros depending on the market. My max size on any prop program with less than a $10,000 balance is, and when I say less than a $10,000 balance, that means that I have, so for instance, let me give you an example. So this account right here, this PA right here, has a $5,000 balance. So on this account, I'm still trading 1 to 3 micros with a max of 6 across 2 markets. It could be a max of 3 across, of 6 across 3 markets. That would be 2 each. But more often than not, I'll scale up to maybe 4 to 6 contracts in things like gold or the NASDAQ or the S&P, depending on how things are moving. In my trade room, though, I spend most of my time just usually when I'm doing things right for people, I'll just be hanging out on the Dow, because the Dow is the best instrument to learn from, the best one to manage risk, the smallest tick increment, the lowest volatility. So every question about sizing and contract sizing should be backed into the volatility profile of the instrument you're trading relative to your daily risk budget, relative to the tick increment or the point increment of that. That's a long-winded way of saying if you're trading something like the NASDAQ and it has a $2,300 daily range on a single MNQ contract, right? Is that possible? Yeah. Maybe when it's up to like 700 or 800. But let's say it's normally around, 300 or 400. So you take 400 times 2, you get $800. And your daily risk budget is 250, 35% of that. You have to back into what you can reasonably trade in terms of sizing relative to what your daily risk budget is. So I can trade up to 6 because I have a $400 daily risk budget, and I generally don't trade the NASDAQ all that often. All right. How do you frame bias? I don't have any biases. What I was mentioning is like, so here's the ZN on we'll just look at it over here on a 30-minute. See this? So to many, this looks like a symmetrical double bottom, which it can be. An opportunity to potentially buy. If I had a long signal here and wanted to get long, rather than get long, I would get short the 50 delta, around the 50 delta. The ZN only trades in 4 strike prices per point. Each point's $1,000, so they trade at $250 price increments. And there's usually Monday, Wednesday, Friday expiration. More often than not, depending on the cycle, just Wednesday and Friday expirations. So you just would sell a put here when you have a signal on the underlying. I'm not doing anything fancy with option strategy. I don't look at anything in any kind of options analyzer. That's not what I do for my style, for what I'm necessary. I have found that I have a tremendous amount of respect for a certain amount of options traders out there, and I love all the time and effort they've put into really, in my opinion, relatively complicated ways of looking at all the math associated with options, and it's giving them enough edge. The problem I see all the time is they can't size up to have too much confidence. If I have a real signal on the range trader and I want to sell a put, I can sell a lot, like 50, 100, because I'm not looking for theta decay or any type of vega or rho. I'm simply just expressing a directional bet as if I was buying the underlying or selling the underlying and getting paid to do so. So for me, that's a lot easier. I didn't say anything won't work on very large cash accounts. Do whatever what works is always abiding by a 10% daily risk budget until your account gets to, I don't know, 50,000. I wouldn't be risking 5,000. I'd be risking more like 2,500. When it gets to 100,000, I'd risk more like 3,000. Get to 250 on my accounts that have mid 6 figures in it. I have a 6,000 daily risk budget. I'm very conservative though. I mean, losing $6,000 in a day pisses me off. So I'm just not going to lose 6,000 in a day. It happens sometimes. But those are day trading, right? You can't position trade and be involved in selling premium on options and not take some heat sometimes. But for those that aren't familiar with how options on futures work, they're not levered. Let me say that again. How cool is that? They're not levered. Why do so many people trade stock options, equity options? Because they provide all this leverage. Most people can't handle the leverage and they can't hedge that position using the underlying. So as such, they have to spread and do all kinds of other things. An option on future is assignable as one of the underlying, the same as if you were long or short the underlying. And if you want to hedge that position or not get assigned or whatever the case may be, is you can, let me go up here and just, we're going to watch, we already went through the market on close orders. See if we get a fill at 44,550. So good question about are the trades the same on live? The trades are the same on the live tracking accounts, which have very small balances, where I'm trying to do the same thing and take reasonable profits, cash flow a very small account in a way that I want to be able to ultimately show people how you can take $7,500 to $10,000 of real money and pay your mortgage every month. And I mean that. Even if your mortgage is like $3,000. We're not going to compound. You're not going to take 10,000 and make 30% in a month and then compound it, increase your size. That's not how trading works. It's just nonsense. All the people that talk about that, it's just bullshit. I mean, if you want to leave it in there and then work the next month and then work the next month and then work the next month and then have to recalibrate your strategy and resize and all that kind of stuff, that's fine. But so I have some of those. We've already discussed there's some live accounts I have that has nothing to do with any of the stuff I talk about here because none of the prop programs offer it, and I want to focus on having people not risk any of their own capital while they learn how to trade. But the spirit of the question also is, yes, I absolutely assign various values and make certain decisions based on, I'm just going to close these these remaining orders here. And then in 66, I'll close it here too. NASDAQ, there we go. Let's just close that.
Order canceled.
All right, so then look at any orders we have left. We have quite a few. I'm going to cancel all these orders. All right, I'm going to have to drop in 2 minutes, so if you have any last questions, I'll try to get them in here on a Friday. Thanks for joining, everybody. It was fantastic. Have a great weekend, all that good stuff. What I was getting at, finish that one. I don't know if I have time for these other questions here, but yeah, we talk a little bit in the trade room about having scouts. You know, do you need all these accounts? No, you don't need all these accounts. I mean, it's a little ridiculous. You can manage it with a copier. It's fine. You can see down here, I did not do any trades in this live account down here, the one that starts with U. So I wouldn't say take on more risk or anything, but take some levels a little early, just get a sense of how things are happening in some of the evals that are not yet funded, and then use the funded accounts a little bit more conservatively. That's why you'll see, I mean, obviously here, big numbers up here in an eval, and then, you know, these are smaller numbers here. So there you go. How long do I hold my positions on the ZN? There's a bunch of logic associated with those that I can't get into. If I get a move in my favor, right away, and you know, I sell something for 32 ticks and I can buy it back for 15 ticks an hour later, I do so. So it depends. How is the new PropShop in comparison with Apex, and do they pay? They're brand new. You can find out about the payouts on. You know what you should do for anybody that has an interest in PropShop? Just watch my stream from Wednesday. I spent almost the whole stream on PropShop, so you can find out more about that there. Thank you, everybody. Stay green, trade like you mean it. Have a great weekend. I appreciate everybody for joining. We'll see you later. Be good. Bye-bye.